Hey, what's up, my beautiful people? It's your boy Devo, some motivational, back with another day trading spy recap. And today we have a lot of good news actually going into tomorrow. Not a lot of good news on my trade, and again, not a lot of good news on my trade. But I promised you guys to show up through the break evens, through the losses, through the winners. So that's exactly what I came to do today. It's a little difficult because I'm tired of showing up saying I lost trade, lost trade, lost trade. But hey, it's all part of the journey, right? It's all part of becoming profitable. If it was easy, everybody would be doing it. Okay, so just like for you guys as well, if you're trying to trade and maybe you're not having the best results. Sorry about that. Maybe you're not having the best results. Maybe you're struggling with whatever. For me, I just feel like it's just like little things that I gotta work on and fix because I feel like I'm on the overall. I feel like I have the right. I know I have the right strategy, but I feel like I have the overall right like concept and know what I'm doing. But I just feel like it's the little things that are like tripping me up. Not being patient sometimes, or whenever I don't take my trade on my strategy. So ultimately, it's like I can't show up and be like, oh, I had a big winner because I'm not taking my trades whenever I see them. And then on days where I'm willing to risk money, I'm just kind of forcing a trade. So it's just kind of like little mental things that I feel like I need to work on, and little things I feel like I need to work on, and that's what going to keep you from being unprofitable and going to turn you profitable. It's really the little things. It might not always be the big things. Like you might not have to change your strategy to become profitable. You might not have to switch anything big on what you're doing. It might just be the little thing, like maybe your risk to reward ratio, or you're not scaling down from big time frame down to small time frame. You just get caught up in the small time frame. Just like little things, and I feel like that's really what it is. Okay, so first I'm just gonna take you into the trade I took for the day, and then I'm gonna take you into a lot of good news that we have, and then what I can see going into tomorrow. Okay, my good people, and real quick, I want to say thank you all for supporting me, for commenting, subscribing, for all the views that you guys give me. We're up to 50 subscribers. That's big for me. I mean, when we first started this journey, we were at about 7 subscribers, so that's big for me. So I really appreciate all of you guys, and for sticking with me through the journey. You know what I'm saying? And big winners are coming. A lot is coming. This is just the beginning. I haven't even scratched the surface with you guys, and trust me, we are all going to be able to understand these markets because I talked to a friend today, and he said, honestly, I don't even watch your videos because I don't know what you're talking about. Well, that's why I try to break these things down. Sorry about that. That's why I try to break these things down for you guys, and so you guys can know what I'm talking about. And so you can want to watch my videos because I try to break these things down so you know what I'm talking about while I'm saying these certain words. Okay. And real quick, give me 1 second. I'm not editing nothing out. This is all gonna be organic. So just give me 1 second, my beautiful people. 1 second, 1 second, 1 second. Okay. Thank you for sticking with me. Okay. So let's get straight into it. Okay. So to start the day, we actually had some bad news, which is not actually bad news. And you're saying, Devin, what does that mean? I'm gonna explain it to you right now. So we had a lot of news coming into the market. We had GDP. Um, yeah, we had GDP, PCE, employment cost, GDP growth rate. Excuse me, my good people. Home sales. I mean, you name it. I mean, you name it, and it came out today. Okay, so we had a lot of stuff. Crude oil imports change. Gasoline stocks change. Crude oil stocks change. PCE again, and it really all came out bad, honestly. The GDP was negative 2.5. The forecast was 0.7%. GDP price index was actually, oh, sorry, not that one. GDP growth rate was negative 0.3%. So you remember how, um, sorry, last quarter we had negative GDP. Well, it is projected for this quarter to be negative GDP, okay? And so, let me see. Okay, sorry about that. Yeah. Um, the first quarter was negative GDP. Sorry about that, my good people. The first quarter was negative GDP. And so that is actually not good because lower than GDP is tightening on the market, right? It's showing that the economy is not growing. But the thing is, why did we have negative GDP? It's not because the the economy is necessarily slowing down so much. It is because companies actually got ahead of the Trump's tariffs and they were importing more products. They were getting more inventory, right? So they were stocking up on inventory. So that is what slowed the GDP down, showing that their revenue didn't didn't sorry, it's hard to explain it. Their revenue, it's not showing that their revenue is ramping up because they stocked up on so much inventory. You see what I'm saying, ahead of time, right? So that's what makes the GDP go down. But that is actually good news. Why? Because that means they stocked up on all this inventory. That means next quarter that GDP could fly through the roof, meaning we could have probably a 0.5% or even a 0.3%. You see what I'm saying? So we could have a really good GDP. So next GDP that comes out is going to be very big. Why? Because exactly what I said, we stocked up on these big companies stocked up on so much inventory to get ahead of the Trump tariffs because they know that they were going to have to pay more for these products whenever the Trump's tariffs came in. So they got ahead of the tariffs and stocked up about, I believe it said 5 months or about 50% extra on their inventory so they can be prepared for the tariffs. You see what I'm saying? So that is why the GDP went down because these companies um, bought so much inventory, right? So basically, it's like they have more inventory than is showing their sales. You see what I'm saying? But it's because they bought so much extra to get ahead. So that lowered the GDP down for this quarter, but that is good news for the next quarter. Why? Because if next quarter, and that is where if next quarter we have positive GDP, which is projected because these companies aren't going to have to order so much inventory, right? So that means they're just going to be getting um, cash flow, cash flow, cash flow. You see what I'm saying? They're just going to be getting revenue, right? They're not going to have to keep stocking up. They're not going to have to spend. So that means they would just, because they're already stocked up, right? So that means they will be getting more revenue, getting revenue, and not having to spend for this inventory. So that means it's projected for GDP to bounce up, right? Okay, now let's look at this, my good people. So it says U.S. economic growth slowed sharply, slowed sharply in the first quarter of 2025 as businesses rushed to stockpile goods ahead of President Trump's sweeping tariff policies. The nation's gross domestic product, the total value of products and services, shrank at 0.3% annual rate, down from growth of 2.4% in the final 3 months of 2024. The Commerce Department reported Wednesday in its initial GDP estimate. It's the worst quarterly performance for the U.S. economy since early 2022, when the economy was in recovery after cratering during the COVID pandemic. And so, excuse me for, because I know in previous videos I said we had negative GDP already, but no, it was projected to be negative GDP already. People already, like analysts and professionals, already expected for this quarter to be negative GDP. So sorry about saying we had a negative GDP already, but no, now it's official that the first quarter of 2025 was negative GDP, and that's where I still stand on. If we have this second quarter, which is to June, if this quarter is negative GDP, two quarters, two consecutive quarters of negative GDP is considered a recession. But experts are now saying that no, it has to be officially called a recession, but by definition, that is what a recession is two negative quarters of the year, negative GDP. That is counted as recession. But like I said, analysts and experts are now saying no, they have to officially call it. But so you see how it says U.S. economic growth slows sharply in the first quarter of 2025 as businesses rush to stockpile goods ahead of President Trump's sweeping tariff policies. And right here it says the U.S. economy shrank in the first 3 months as government spending fell and imports surged due to firms racing to get goods into the country ahead of tariffs. And then we can just come down here. It says while imports count against growth in calculations of gross domestic product, the surge is expected to be reversed in the months ahead. Okay, it's expected because we had bad GDP this quarter. The months ahead, this next quarter is projected to be good because we have so much stockpile that the money should be coming in. You see what I'm saying? And they don't even have to stockpile. They don't even have to get imports for it. Not saying that they don't have to get any imports at all, but they won't have to get as much because they have such a stockpile. And so they'll be able to just collect revenue. And so that's why the months ahead, they're saying the GDP should be higher. So that's why we still have like the maybe recession going around, but this is not such bad news. This is actually kind of good news, okay? And it says those swings do not necessarily indicate an economy performing poorly. And then it says the report also showed consumer spending, the primary driver of the U.S. economy, expanded 1.8%, though at a slower pace than in 2024. So it's showing that the economy is strong. We are still spending. It's slower, which we want it a little slower. Why? Because we want the inflation down, but we still want to show that the economy is not completely slowing down. You see what I'm saying? So inflation's coming down a bit, but that's good. Well, not inflation, but the consumer spending is coming down a little bit, and that could be good because with the tariffs and everything, that is going to cause inflation to go up, and ultimately that inflation going up, that is going to put the consumer spending down further, which it should, and we see it's already coming down a bit. It should probably come down. It probably would come down a little bit more, and that's why we still have the recession over our head, because if the inflation's going up and then the economy is completely not spending and then negative GDP because the tariffs are still on and still like crazy, that's where we could have negative GDP and then slowing economy, no spending, and that's where recession can come, right? But if we start to see deals worked out, and then with this positive news with the stockpile, we could possibly have positive GDP. If the tariffs get worked out, deals get worked out, and the economy is still not like overly spending, that's where we can have inflation coming down closer to that 2% rate, and then we can get rate cuts, and that would be good for the economy, okay? And so it says the report also showed consumer spending, the primary driver of the U.S. economy, expanded 1.8%, though at a slower pace than in 2024. Just read that, but just read it again, okay? And so that is the GDP news is what I think we had this first panic of this move down. This first panic move down from, well, really, we broke all the way down from pre-markets because the GDP came out about 30 minutes or an hour before markets opened. Sorry, my good people, let me close this. The GDP and a lot of other numbers came out before the market even opened, and so we actually had a huge gap down and then a rundown, right? Before just getting bought all the way back up. Literally just getting bought all the way back up. Kind of a rally towards these earnings that were going to come out, Microsoft and Meta. So I think companies kind of took more of a risk for these earnings. And where did I get in at? And where did I get stopped out at? This is where I got caught. Excuse my good people. I got caught in the chop. I should have been on my 5 minute because my 5 minute, I wouldn't have even thought about getting in anywhere right here because I'm not seeing no big candle, no big drops to get a reversal. We had a fair value gap. We had a fair value gap right here. And I actually had some resistance lines and I actually deleted them. Sorry about that, my good people. I believe I did have a resistance line somewhere right here. I'm not just gonna mark out one because I'm not sure where I had it, but I did have resistance lines. I just deleted them, and I'll tell you exactly why in a little bit. I don't want to spoil it. But so we had a fair value gap. We straight ran through that fair value gap, and I got in up here. Cause I was like, oh, okay, it's coming up here, and that's where it's like you have. Why did you get in right here? That's where it would have been like no entry right here. Like you see how on the 5 minute it's like, Devin, why did you get in? I was on my 1 minute. Excuse me, good people. And I said, okay. Price swept this right here, this little pullback for this equilibrium of this big strength candle, right? I said, okay, price swept this, swept it, dropped down, gave this pullback right here, and I was in right around actually this move. I mean, I was in right around this candle right here when it first started dropping. And that's where it's like, I don't get in at my A plus setups, but then I try to force a trade on days, you know what I'm saying? I'm forcing a trade, but on the days where I have my perfect A plus setups and I have my perfect trades, I'm immobilized and I don't take them, right? So that's where I just gotta lock in. I gotta lock in. I gotta be better, and that's where you can't blame nothing on the market. Can't blame nothing but on yourself because it's ultimately you versus you. Excuse my good people, and that's where I'm gonna get better. And tomorrow I'm gonna show up. I'm gonna be better. And tomorrow we're gonna have a winning trade, okay? And so I was thinking, okay, we swept this right here, this little pullback, right? We swept this little pullback before, and keep in mind, I didn't actually know about the imports and stockpile. I just seen negative GDP. There was so much bad news coming out. There was a lot of bad news coming out and everything. And I was just thinking, okay, we want to dump. I was thinking we want to dump. And so that's where it's like, no, don't force your trade, Devin. Just because you see bad news, follow price action like we know. And so I seen us sweep this. I'm like, okay, well, we just came up, swept this, and we wanted to actually touch this big strength candle again, stop everybody out right here before dropping again. And so I got in right around this candle right here, 2 contracts. It broke down a little bit, came up, just tapped this gap right here, broke down a little bit more, and I was getting a little happy. I thought we were going to get more of a dump, kind of erasing this trend, because as you see, we have like a little trend line right here. We have a little trend line. Depending on how you want to angle it. Yeah, see? We have a little trend line right here. I was thinking, okay, when it broke down, we came up, tapped this little gap right here. Not a fair value gap because you need an order block and you need a trend for the fair value gap. This is not a fair value gap. It just tapped this gap, not a fair value gap. And it dropped down a little bit for actually touching this fair value gap. This is an actual fair value gap. Why? Because this is where the trend is. Why is this an uptrend? Because we had a high, low, lower high, lower low, higher high. And that's where it's like, oh man, that's just basic stuff, right? This is a higher high, came down, tapped this fair value gap. See that? Tapped this fair value gap and traded upwards, right? And we actually did. Okay, yeah, and trended upwards, right? So that's all on me. Can't blame no one but myself on that. I lost 120 bucks because my stop loss was up here after I got in down here. Came up, it was going down my way. 2 contracts for coming up. Was playing with it, broke down some more. Came up, broke down again. Came up, it kept sweeping this area, right? You see how it kept sweeping this area. So it didn't actually kick me out till this candle right here started breaking up. And that's where I was out. Minus 120 bucks. Was frustrating, yes, of course, but and you have no one to blame but yourself. Because hindsight, I'm looking at it and I'm like, Devin, why'd you even hop in at the trade? On my 5-minute, it didn't give me no signs to even get in at there. On the 5-minute, it gave me no signs to get in whatsoever. It ran through this fair value gap, which it shouldn't have if it wanted to drop, right? We know these things. We got to be disciplined with them, right? We can't let our emotions rule what we know, right? We can't let emotions overrule our technicals. Ran through this fair value gap right here, created a higher high, and pulled back into this fair value gap and broke up. It's pretty much like it's pretty textbook, right? But I had so much bad news. Then again, I didn't read into completely about the stockpile and thinking about it. I just saw negative GDP. Prices were rising higher than expected, which inflation, the tariffs are causing prices to rise, causing inflation. So inflation can be caused off 2 things: tariffs, and usually it's off of consumer spending. When the economy is spending a lot, the prices rise, right? Because there's more demand for products, right? So we cause inflation, but we have tariffs now. So that is causing inflation, and our consumer spending is coming down. So if inflation keeps going up and consumer spending goes down and these tariffs remain, the GDP will lower, and that's how you run into a recession, okay? I just wanted to get that clear because I know I say like inflation and stuff like that. I just want to make it clear why we have inflation. If you're saying, Devin, why do we have inflation if we see the consumer spending going down? Well, the tariffs cause inflation, right? Because it's raising prices on these goods, right? So that is why inflation is still going up, even though our consumer spending is coming down. So if we didn't have tariffs and the consumer spending is coming down, that could be good for the rate cuts, but we're still having inflation up, and so the Fed doesn't want to cut rates, right? Excuse my good deal. I just kind of want to break that down for you guys. And so, dang it, that is where I got caught in wrong at that trade. Simple as that. That's where I got caught in wrong at that trade. The 5-minute was showing no reason. We ran through our bearish seller gap, our bearish fair value gap. We ran through it. We created a higher high. We touched the bullish fair value gap and broke up to higher highs again. And that's on me. That is completely on me. But tomorrow we're gonna show up and we're gonna crush it. Okay. So earnings. So remember how I tell you we were having earnings? Well, this is good for our investments. It's really good for our investments because remember I told you I had Meta. I don't have Microsoft, which I do want to add Microsoft, and there's a lot of investments I need to add into my portfolio. But right now I'm heavy on Meta, Tesla, and Nvidia. Those are the 3 I have very, not gonna say very big size, but I have good money in, right? And Meta is performing well. Remember I told you my average price was $4.98. It actually has rose to around 5.30ish because I've been adding more and more and more. And so what is Meta at right now? Well, okay, real quick. So Meta actually crushed earnings like it always does. That's why it's just such a good company. It's spending in AI is very good. They always crush earnings. They're always big on the next trend. They're investing heavy into AI. They're always spending good. Their revenue is always good. You see what I'm saying? They're always crushing it. That's why this this stock ran up to $700, and just because of the tariffs and everything, they came down. But really, this is the $1,000 stock, right? This is gonna be a very big stock, and that's why I'm very big on Meta. Okay, and so we see estimates were 5.22 and 41.27, crushed it, a whole $1.21 more, $6.43, and then 42.31 billion of revenue. And then growth 16.1%, surprise 23.2% surprise. That is crazy. They always knock it out of the park, and Microsoft did the same. They didn't knock it out the park like Meta, but they still knocked it out the park with 3.46 reported, with their estimates at 3.20, 68.38 billion. They crushed it with 70.07 billion and 13.3% growth with 8.1% surprise. And that is why these companies ran up. So let me just show you market open. During market open, we had Nvidia at 108. We had Tesla at 282. Oh man, it's not showing us. We have Nvidia at 108. We had Tesla at 282. Sorry, my good people. I want to look real quick what, because it's not showing me what Meta opened up at. Okay, and Meta opened up at 537. Okay, but it's about to show y'all right now. Now after hours, let's look. Nvidia at 113 is running up right now. Why? Because Nvidia actually spoke with President Trump at a meeting, and he was basically talking about his $500 billion investment into the U.S. on their company, right? And I'm very big on Nvidia. So what? I'm up on Nvidia because my average price was 107. It's 108 now. But I know Nvidia has a big potential. Remember, investments are for long term. We're not looking for tomorrow, right? Obviously, I'm up from Nvidia. I'm up 4%. I'm not running around the park for 4%, you know what I'm saying? But I do like how it is green right now, right? But I'm looking at the long term. 5 years from now, I know Nvidia is going to be way higher than 112. You see what I'm saying? Meta. What is Meta at? Remember, we started at 537 to open the market. Well, Meta actually closed the market at 547 and now has ran up all the way to 578, and it actually hit the 582 mark at the high of aftermarkets, right? And so on Meta, we're up 9%, right? We're not running around the park. I mean, we're happy about it, but we're looking at the long term. We know Meta has a lot of room to grow, okay? Excuse me, good people. $29. And remember, I said it went up to 582. So there's really what, $33? And so Nvidia and Meta ran up, okay? And that's good. Oh, Microsoft, $27 change. 6.97% aftermarkets, right? So it ran up $27, right? So that means Microsoft was at 495. I mean 395 to end the mark, to close the market, and now it is at 422 aftermarkets, right? Because Microsoft and Meta crushed earnings, and so they get rewarded for it, right? And keep in mind, these things would run up way more if we were completely out of the woods with these tariff things, okay? And so that is very good news. We have really good earnings, and that is very good for the economy because it is showing that these companies are still making money, and these big companies are investing into AI, because the same thing as Meta, they're seeing they're spending very their spending is very high on AI. Same with Microsoft. Microsoft is very big in AI. Microsoft is actually like the leader in AI. Okay, and so that is showing hope to the economy that they're doing their thing with AI. Because remember, AI is the future of the world, right? Robots and artificial intelligence is the future of the world, right? And so showing that they're crushing earnings, they're making money, they're spending heavy into AI. That is very big for the economy, and that is showing very positive growth for the economy and just pumping optimism into the economy, right? So as we can see, after hours, the S&P is up 51 bucks, almost 1%. The Nasdaq is up $270. It's pumping up as we see, right? We just seen it pumped up to 52, and Nasdaq pumped up to 272 now, up 1.38%, right? The Dow up 5.5%, 204 bucks, right? So that is very good. And right now, as we speak, we have this resistance right here at 559, and the SPY is sitting at 560. That is perfect. If tomorrow it holds up, that means it is sitting right above our resistance, so it can test this resistance, giving us easy support and a bounce, and we will be in. We will be straight in. Okay, so that is perfect to see. We love to see that. We love to see that. We hope this 560 on the SPY can hold. Why? Because we're right near this resistance. If it holds to open, that means we're right near the resistance, and we can make it support or break through it, right? Remember, we want to be right near these areas of resistance support, so we have a clear understanding of where price wants to go. Okay, so real quick, I want to mark out some resistance and supply zones for you guys. So we can delete this one. I can delete these levels because I showed you where I went wrong at, but we're not even gonna hang our hat on those because tomorrow we're gonna win. So I have this 559 area resistance. Why? Because we used it as resistance, right? We used it as resistance. We poked through and try to hold it, but nope, we got broken through. Use it as resistance again, pump through, and you see what I'm saying? So it's a little area resistance, but ultimately, if we break through there, we can be shooting up to this 567 area. If we shoot through there, we're all the way up to this 570 level already. Okay, that 570 level that I said we could test, and we're shooting up there pretty fast, right? So I can see us tomorrow. I can see us tomorrow continuing the pump because we have a lot of good news. So tomorrow I can see us start at that 560, come down, and want to pump up. That's what I can see. He either wants to pump up, use this area of resistance as support, or it's gonna open up a little under it, break through this area of resistance, give us that test on that resistance, making it support and touching a fair value gap, which will be an A plus perfect entry, creating a higher highs and pumping up. Or if we want to have a little pullback because we ran up so hard, we could have a little pullback. But I can see us, if we do a little pullback, I mean, we're not that high off of where we started because we're at 560. We ended the day at 554. So, I mean, if it wants to do a little pullback, I could see that, but that would be temporary. I could see that being temporary, and I could see us having to move like that, where we have that little pullback, but then we have a change of character, reclaiming this resistance, making it support, and then pumping up. Really, everything I see tomorrow is going to be some type of pump. That's what I can see because we have all this good news. And then earnings tomorrow. Tomorrow we have more earnings. We're going to have Amazon, Apple, Reddit, Airbnb, Big Bear, Roku, and that is pretty much it that we know about, right? So that is very big alone, right? The Apple, Amazon, Reddit, Airbnb, Big Bear, and Roku, those are very big for the economy. So if those companies, especially Amazon and Apple, If we see those companies crush it, and we see them spending big in AI, this market will run pretty good. And because we also have some more good news, real quick, I want to run through this bad news. It says Tesla board has begun searching for CEO to replace Musk. And as we were talking, um, Tesla did actually dump from 283 and it came all the way down to the low of 272, but now it's back up to 278. But that is not very good, seeing that Tesla wants to change CEOs. You know what I'm saying? That's not the best. Where did the news go, man? They just changed my whole screen. Oh, sorry. I'm about to say, what the heck? Okay, so it's saying that is not very good news for Tesla, but hey, that's just not very good news for Tesla. But it says, oh man, what was the good news I just had it on? Okay, U.S. reached out to China to initiate trade talks, which is really good. We also had U.S. and Ukraine. I said Ukrainian. U.S. and Ukraine actually reached a deal with a mineral deal. So Trump comments on stock market weakens, blame Biden's policies, which is not very good for the market. They don't want to see Trump, blaming the other president, but we're still getting a pump. I'm trying to look for that news. Trump eases auto tariffs, tech earnings, U.S. data ahead. Also, we have China right here, actually. Tariff weigh on China's economy. Oh, no, it's not right here. Well, China actually took off tariffs on some of US's ethane imports, right? And again, I can never find the news on this investing app on my phone. It's the best app in the world, but on the computer it doesn't show worth a crap. Oh my goodness, yeah, they're not gonna show nothing, dude. Come on, man. Sorry, my good people. But this is really good going into tomorrow because this just came out. This is really good going into tomorrow with all the good news we have. China, again, I'm just going to tell you it. It's not going to show it. I'm not even going to worry about it. But China took off tariffs on U.S. ethane imports, which is really good. U.S. is talking with China to initiate trade talks, right? And then also U.S. and Ukraine have come to agreement with a minerals deal. So it's showing it's showing that the U.S. and Trump is working out deals, which is really good for the market. We had really good earnings for Meta and Microsoft, showing very high spending in AI, which is really good. And so what is going on? They just took off. They just took off Meta's earnings. Okay, you see how this stuff is playing with me in real time. I'm not even gonna worry. I'm gonna exit you out actually because you're acting dumb. Okay, so we have good earnings again. I just want to reiterate everything so we know why we could see a big pump coming tomorrow. Okay, so U.S. is initiating trade talks with China. China has dropped the tariffs on U.S. ethane imports. U.S. and Ukraine have come to agreement on a minerals deal. We've had really good Meta earnings and showing increasing spending in AI, which which the government or the economy, the big boys, the market wants to see. There we go. What Wall Street wants to see. Couldn't think of the word. That is what Wall Street wants to see, is increasing spending in AI. We have Microsoft crushed earnings, really increasing spending in AI. Our GDP is lower, but it's not just lower, it's lower for a reason because we got ahead of everything. These companies got ahead of the tariffs and stockpiled, which is projected to have good GDP for the second quarter, right? So that is good news as well. We have that's pretty much it. But that is those are like five big things. Okay, that's very good. Okay, so tomorrow we also have some more some more news, some more data coming out. We have initial jobless claims, challenger job cuts, global manufacturing, ISM manufacturing employment, manufacturing prices, gas stocks exchange, 8-week bills, 4-week bills, 10-year bonds, mortgage rates, Fed balance sheet. So tomorrow we also have some big data, okay, to look at. A lot of it will be coming out like exactly like pretty much 30 minutes after the market opens, or I mean these bill auctions and the bond and mortgage rates will come out a little later after market, but that might not move it as much. We have the Fed balance sheet, but that will be when market closes. But kind of the bigger things, initial job claims, manufacturing employment, construction spending, and new prices and stuff like that, that's going to pretty much be out about 30 minutes after market opens. So we can actually just like it won't be like a much of a surprise, or we won't have to wait all day for like a chop. We can pretty much have an uptrend, or if the market wants to downtrend, pretty much like when the market kind of opens. Okay, so that's pretty much it, guys. I know the video is pretty long. I try not to make them too long, but it happens with a lot of news that we had, and trying to explain myself. And remember, we're still getting better at this. Every day we're improving. I love every single one of you guys who are with me on the journey. Tomorrow will be a big day. I can already see it. I can already feel it, and I already know it. Okay, and that's the thing. You got to speak it into existence, but just speaking and not gonna do it. You got to make sure you work for it. You got to make sure you study for it, and you got to make sure you pray about it. But faith without works is dead. Okay, but work without faith is also dead, right? So you combine those two things, and there goes the success. Okay, so we will execute tomorrow. We're ready for tomorrow. Remember, don't beat yourself up over the losses, because ultimately it's all a journey, right? Remember, it's not a sprint, it is a marathon. And remember, we're going to get to it, okay? And so I love every single one of y'all who are with me. Remember to study so you're not gambling. Make sure to follow your disciplines, your strategy. Remember, make sure to have risk management. Do not over leverage. Make sure you're doing all those things. You're following your disciplines, and we will succeed, okay? Remember, I love every single one of y'all who are with me on the journey. And make sure y'all stay persistent, passionate, and make sure, most importantly, you get paid, all right? Peace.